Hey there. Let's talk quickly about earnings trades. Now, before I get started, I'm not a licensed financial advisor. So this video is purely for entertainment purposes and trading is at your own risk. So, just be aware of that. When you trade, you're at risk of losing whatever you've invested and sometimes a whole lot more than that as well. So with that disclaimer out of the way, let's quickly talk about earnings trades. People have asked me if folks at Snowpal, we are a software company, as you know, but we trading is one of the things we do. Why? For more than one reason. The second of those reasons will be more interesting to you. We'll share that in due course of time. But let's talk about a little bit about earnings trades. So if you're an investor, somebody who's investing in the stock market, be it a long-term investor or a day trader, you probably are aware of earnings trades where, every quarter, every, public company out there is going to come and have an earnings release followed by a conference call where they talk about how they did the past quarter, and they're going to provide guidance more often than not about the forthcoming quarter or the quarters, for the next 3 or 4 sometimes, right, for the whole forthcoming year. And that happens, typically outside of market hours. Now, for some securities, it can happen. It does happen during market hours, but those are few and far between. From what I know and what I've seen, most of the companies announce it either before hours or after hours, which is before 9:30 a.m. Eastern time or after 4 p.m. Eastern time. I don't know the exact number, but I think from what I've seen, most of them, even between that, the split is essentially companies that are reporting earnings after 4 p.m. Eastern time, not as much before 9:30 a.m. Now, what happens then, right? So when there is an earnings release, you'll see a lot of articles by analysts and folks who are experts in the industry, or other people who are writing on different forums like Seeking Alpha, for instance, who try to share their opinions on where they think the security is headed. Now, it's very volatile, right? A lot can happen. Now, at the very fundamental level, the companies, there's a lot of financial metrics. I'm not going to go into those details here. Let's talk about the basic ones: earnings per share, EPS. So what is the current earnings per share, and what is the forward earnings per share? What's coming in future? Because that's more interesting. I was going to say just as interesting, if not more interesting, but actually it is more interesting. And then they also give you the EBITDA, the revenue, earnings, and a whole slew of other things. But when they say top and bottom line, they're talking about earnings per share and revenue. And then to see what happens is you compare it to see whether they met the analyst estimates. If they did not, how much did they fall short by, whether it's earnings per share or revenue, or if they exceeded analyst expectations, how much did they exceed that by? Now, let's say you do all your due diligence and you're like, you feel good about it. And let's take today because, Lulu announced their earnings. And they beat earnings estimates on both the top and bottom line. I think earnings per share and revenue. But at the moment of this recording, after hours they are going down. I think the last I saw they were like 7% down. So now you're wondering, if you're a new investor, like, what, it looks like they did better than all right. They beat analyst expectations on both the top and bottom line. So why in the world would they actually drop? And you might be surprised, and rightfully so. That's because if memory serves me right, I think their forward guidance was not as good as expected, right? So what they expect to be doing in the next quarter or the subsequent quarters, right? So the guidance makes a lot of difference, almost all the difference sometimes. But that's not just it. Sometimes, they might beat their earnings per share, beat their revenue expectations, and even beat the forward guidance, and yet they could drop, and then they could have a significant drop. Because if you go look at the charts, like say go to Tip Ranks or one of the other places and look at the earnings reports and the day after earnings for any of these securities that you're interested in, you'll see there's a lot of fluctuation, right? There's a lot of volatility. Sometimes it could be 30%, it could be more, it could be lesser, but it can be those really big numbers. Now, you're not going to see a 30% fluctuation outside of earnings for the most part, right? Now, there could be a short report that's released for a certain company. Like, there was a short report released for app, ticker symbol APP today. I think somewhere around 2:30, and then they plunged quite a bit, like 10% in the next in the 20 minutes following that. Those things happen, but not all the time, right? That's, again, reasonably rare. But where you see a lot of the fluctuations after earnings. So it depends on your risk tolerance and how risk averse you are. If you're open to taking these chances, people are open to taking those types of chances, like big risks, then earnings trades might work for them. But it's highly risky, like extremely risky, because let's say you invested at $10,000 and somebody reported earnings and everything looked good, and you did the research and you actually bought them. You didn't short them, and things were good, like they beat estimates, EPS, and the forward guidance is pretty good as well. You might still see that they drop 15%. And for a $10,000 investment, then you're losing $1,500, right? It's a lot of money. So, and if you increase the investment amounts, you do the math, the numbers get bigger and bigger. So you want to be very careful about that. Now we talk a little bit about a lot of these things in some of the courses that we publish. I have the URL is there on the screen as you see here on the video. So check out our courses. Again, we are not professional financial licensed financial advisors. A lot of what we do is just for entertainment purposes. But if inadvertently you come out of those videos and sessions with some learning, then that's great, right? Anyway, so if this is something of interest, you may want to check out some of our courses. They're very affordable. It's usually under $10 for the most part, right? They run about to about an hour and a half, give or take. We go through examples, some numbers. Just depends on the topic we end up covering in that particular course. And if finance and trading and investments is something of interest to you, then you may want to check out those courses. Our hope is, while we publish them for entertainment purposes, people have valuable takeaways from that. And down the road, I think about 9% of the American population is investing in the stock market, if the article I read is correct. If that can be 9.01%, because people watched our courses and I don't know, found value in doing investments, we'll feel like we've achieved quite a bit. That's about it. Talk to you soon. Thanks.